The first row captures the nifty levels in 2014, 19 and 24. But interestingly, if you look at the last two columns, VIX and the P multiple, the VIX actually is unusually low. While the VIX may have appreciated from 10 to 20 or from 11 to 21 in a matter of 4 weeks, but interestingly, the India VIX in the run-up to the election is actually the lowest we've seen in the last 3 election cycles. And if one really looks at the market cap also, even though the market cap to GDP is trading at a premium, and it is the highest we've seen in a long time, the valuations are not like sky high, or they remind you of any kind of a bubble territory. So the markets, both in terms of the technical setup and in terms of the valuations right now, are not very nervous and are not frothy at all if one really looks at the market from the prism of large cap stocks. But other striking feature, I guess, and the most heartening feature is the SIP number. The average SIP flows in 2014 was about 1200 crores. Now that stands at 8,000 crore in 2019. But 1200 crores, which was the monthly SIP flow in 2014, has moved all the way up to 20,000 crore. Now for me, this is the single most important differentiating factor for the markets, which is that India's dependence on global inflows is reducing, and the force with which domestic inflows are coming via the SIP route, via the HNI route, and via retail participation is really the big differentiating factor between the 2014 and 2019 cycle. So markets are much more deeper, markets are much more mature, and markets' ability to shrug off any large selling which could be triggered from foreign institutional investors, I think is something which is getting very, very resilient. So it's a very proud moment that the Indians are participating and India is rising, and the wealth effect is being felt by domestic institutional investors. But why are we bringing this data point out here? Well, the reason why we are bringing this data point out here is that the worst case scenario is that if we see volatility and if markets don't like the election verdict, then also the downside in the market because of the force of domestic inflows may actually get limited and restricted. History may not repeat itself, but in this time it may not be rhyming also, largely because of the fact that we've got a cushion of domestic inflows. So the bottom line here is the market cap to GDP at an all-time high, the Indian stock market at an all-time high in terms of the total wealth, the positioning of the market from FIs is light, and the support of domestic institutional investors is so strong that even if markets do not like the election verdict, hopefully the swing will not be that large.